Aloha and welcome to the Sylvan Bell Business Growth and Exit Strategy Podcast, your guide to building companies that command maximum multiples. I'm Sylvan Bell, author of 5 books on business strategy and sales, creator of the Sell Framework, Scale Framework, and Driver Test. I work with owners of $10 million to $250 million companies, whether you're scaling for growth or positioning for a profitable exit. Each episode breaks down one framework, strategy, or concept you can apply this week to grow revenue systematically, scale operations, and maximize enterprise value. Let's get started. We are live on episode number 6, the hidden risks that buyers see that owners ignore or don't even know. So the biggest valuation haircut usually comes from the risks you don't even realize you're broadcasting. When you have somebody come in and do due diligence on your business, they're going to take a fine-tooth comb to a lot of processes, procedures, or a lack of processes and procedures. And it's going to illuminate that there's issues inside of your business, your organization, your practice. And it could be a test run for you to figure out, hey, what can I do to get more valuation for my company, AKA the maximum multiple? And buyers, they don't discount what's bad. They discount what's uncertain. You know, they may look and go, okay, over here, there's a couple of SOPs that we need to fix. No big deal. But there's uncertainty in the sales process. That's going to be a little bit of a discount. That's going to be a little bit of a ding. The uncertainty may be like, what's the hiring process and where are all the HR documents? That's another ding. And so when you start, and let's just say that at the end of the day, that the valuation for the company is $1 million, you know, a $10,000 hit here, a $50,000 hit here, and then you start going through this process could lead to a 20% discount on your business. So what you want to do is you want to set the buyer's lens. Buyers underwrite downside first. Continuity, control, and verification. And then what they do is they decide what your multiple, your cash flow deserves. So what they're going to do is they're going to go in and they're going to say, where is there uncertainty in the business? Where is the current owner management team falling down? And for you to know this is important. Anytime that they're looking at all these dings, they'll get them fixed. They'll fix all those dings and dents in 3 to 6 months and double the profitability of the company, triple the profitability of the company. And sometimes it's because they know where to look. And sometimes it's because they can go in and say, things have changed. Management has changed. Ownership has changed. These are the way that the rules have got to be. So if you don't want to change the rules, you don't want to change the foundation right now, somebody's going to come in and do what needs to be done. And they're going to profit off of what you didn't do. And you're going to end up with a discount. What you're going to find is what feels normal inside the business, the workarounds, the heroics, the informal approvals, reads as uncontrolled variance to a buyer. There's a dial, and they're twisting the dials, and they're looking and saying, hey, we want to buy a good company. And if there's too many of these variances, they may go, hey, we're going to pass for right now. There's probably 3 or 4 things that you could fix inside of your business, and we would love to come and talk to you in a year. And it may delay your plans. You may get the profit, but it may delay your plan. So the question is, why can't you do this now? What's preventing it? What's stopping you from moving forward? What's preventing you from moving forward? Who? Sometimes it's a who. It could be a who is or who are. It could be multiple people. And what that requires is to have tough conversations. And sometimes people don't want to have it. If revenue is fragile, the signals that the buyers spot are going to be concentration. Not enough clients. One manager that approves everything, one vendor that can't be replaced, buyer maps that fail when you try to model them out. What you're looking for is, where can these departments run without me? And then where are the problems? Where are the blind spots? Where are the issues? And one of the ways that you could do this is a red team exercise. You go into that department and say, okay, the manager is not going to show up for a week. What kind of problems are we going to run into? The manager is not going to show up for 2 weeks. What kind of problems are we going to run into? And replace manager with owner, replace manager with supervisor, whatever term that you want to use. What happens if they're not around? What happens if they can't fulfill their role and function? What fails first? And people are going to know like the first 3, 4, and 5 really quick. If somebody's been around for a while, they could probably just go 1, 2, 3, 4, 5. And that's good because you want to take notes and you want to fix them. But the next 4 or 5 are just as important, if not more important, because you got to figure out what problems there are in the business to fix, in the organization, in the processes, so that you can walk away free and clear. Quick break and message from your sponsor, Sylvan Bell. That's me. If you're getting value from this episode, here's how to go deeper. First, subscribe to my weekly newsletter, The Party, at scottsylvanbell.com. That's where I share the strategies, frameworks, and case studies I don't release anywhere else. You'll get one actionable insight every week you can implement inside your business immediately. Second, while you're on the site, download the complete Sell Framework, Scale Framework, and Drivers Test, all free with scoring guides, worksheets, and step-by-step implementation checklist. These are the same frameworks I use with $10 million to $250 million companies to build systematic revenue, scale operations, and maximize enterprise value. Go to scottsylvanbell.com right now, subscribe to the newsletter, grab the frameworks, and let's keep building companies that command maximum multiples. Let's get going. Another way to look at this is documentation gaps. Where are there not SOPs? Or where are there SOPs that are old that haven't been fixed? Is there reporting cadence? Is there somebody talks to the manager or the supervisor every day, or every once a week or once a month? Who answers to who? This comes back to organization charts. Is all the paperwork in order? Are all the contracts turned in? Is there visibility of what's being done in the department? Are the forecasts for the month or for the quarter accurate? How close to them are the ideas that you get to? If you say that, hey, this quarter we're going to get to 250,000 for this department, how close can you get without a lot of oversight? Does somebody need to be there driving the decisions the entire time? Well, if it's founder or owner led, that's a problem. Like, somebody should be in there saying, hey, this needs to be done. One of the things that happens is when an investor, private equity, a group comes in and buys a business and it's founder led, they go to the market and they try to find the best talent that they can to replace you as the owner. So whether you decide to do it or not, when the new investment company comes in, they're going to do it. Why not benefit from the most that you can? It's going to get done no matter what. So why not make the decision so that you can do it? Client retention risks are not just that you have one pool of buyers, it's weak renewal processes. And that could be for monthly reoccurring revenue. That could be for year-long contracts. It could be undocumented success playbooks or support signals that are risk churns where people aren't taken care of. The net promoter score isn't there. You're taking a look inside of the organization and take a look underneath the hood. Some departments could have a 8, 9, or 10 in the net promoter score. And then at the end of the day, some of the other departments of support could have a 1, 2, 3, or 4. That's a problem inside of the business. It's really got to be organized. When buyers price uncertainty, it's typically aggressive. It's usually a huge haircut. It's holdbacks. It's money that goes into escrow. It's earnouts. So let's just define what a couple of these things are. Holdbacks are, you were going to get 10 million for your company. They're going to put $1 million on the side. So now you're going to get a check for $9 million. Okay. And typically that money is held in escrow. That's usually where it's held when there is a holdback. An earnout can be, hey, these metrics have to be hit. You said that you were going to do $1 million in rev in this department, and you better hit $1 million in revenue, or you're going to lose $50,000, or you're going to lose $100,000. It could be longer due diligence of them looking under the hood to see what's going on. It could be tighter reps and warranties. You may hear the term basket. It's where they hold money back, or they say these conditions have to be met. Those come down to reps and warranties. What you want to do is turn the invisible risk into visible control. And what that is instead of saying, trust me, you have KPIs, you have cadence, you have SOPs, you have decision bands, you have decision rights to show that the organization is managed the way that it should be done. Here's what you got to do. You got to run an action framework. So run a buyer risk audit this week and look for the points of failure in each department. And you can go with highest and best use of time. What's going to give you the highest and best use of time? What's going to give you the biggest win? And it may not be the department that needs it the most first. You could get into a cadence and you could say, okay, this is how this process works. And these are the SOPs that we're going to put together. And then in the next department or the next process, you're like, okay, we're going to test the SOPs. You might have to change them. But look for highest and best use of time. Get a quick win in. Get a team involved. Look for concentration issues, whether it's employees that can only perform the task, or if it's clients that pay the bills and you have a concentration of people that are at risk. Look for the undocumented Look for the undocumented processes inside of your business. Look for inconsistent reporting in key person dependencies and start fixing them. Put a whiteboard somewhere and say, these are the items that we need to fix. Pick the one risk that any buyer could find in 10 minutes and put work to it. Document it, fix it. Assign an owner, assign a metric, and prove that it's controlled before you go to sell. Mahalo for listening to the Scott Sylvan Bell Business Growth and Exit Strategy podcast. Here's what's available to you right now. First, subscribe to this podcast so you get every framework we release. Second, visit scottsylvanbell.com to access the Sell Framework, Scale Framework, and Driver Test. All free with complete scoring guides and implementation worksheets. Third, subscribe to my weekly newsletter, The Party, where I break down strategies and frameworks you won't find anywhere else with one actionable insight every week. Go to scottsylvanbell.com and enter your email. And if this episode added value, share it with another business owner building a $10 million to $250 million company. Until next time, keep building companies that command maximum multiples. Aloha.